Payment history is the biggest component that drives your credit score. This makes up 35% of your score. So the area of focus with payment history is looking at, do you make your payments on time at a basic level? You want to have 100% of your payments made on time. Anytime you have a delinquent payment, let's say you are 30 days past due or greater, on a credit card, you're going to see a drop in your credit score. If you're someone who has consistently always paid on time and you have one negative mark on your credit report from a late payment, you may see a huge decline in your credit score because this is very out of character for your typical behavior. The algorithm is saying, whoa, something's going on here. This person may be of higher risk because they don't typically pay late. Whereas someone who, let's say they have a history of making quite a few payments 30 days past due, proportionately, each 30-day late mark is going to be worth less. It's a normal behavior of that person's credit file. They're likely going to have a lower credit score, of course, because they do have a history of late payments, but each new late payment isn't necessarily going to drop their score 100 points every single time.